Hello guys, welcome back to AWMFX. Good morning, good afternoon, good evening, or good night, no matter where you are. So hopefully you guys out there are doing great in the market, earning a lot of money, either in the forex market, the commodity market, or even in the cryptocurrency market. All right. So first of all, this is what most of you are waiting for. So I'm gonna start a mini series, all right, on complete trading of using supply and demand. Some of you might think that it is a bit basic on the first few videos, but just bear with me. I'm like what I promised. I'm gonna bring you guys from 0 to 100. Means that from nothing. All right. So some of you might have no knowledge at all on supply on demand. And of course, when I mention supply and demand here, it is what I understand and what I've been using, and it's been very successful for me. Right? It might be different from other mentor or other YouTuber out there. Right? So I'm doing all this for you guys. I'm not earning any money from you. So just give me a like, or maybe if it is better, just hit the subscribe button. All right. So let's dive into it. So I'm gonna make some introduction. Uh, from here to there. Hopefully, you guys understand a bit. So what I mean over here is that build your unlimited gold mine using supply and demand trading. This is absolutely what everyone's dream. All right. So a lot of people as a forex trader, they might be finding their holy grail. For me, this is my holy grail. I gonna do some small introduction about myself. So I've been trading for around uh 7 years. All right, around approximately 7 years. And did I become a successful trader from the first day or the first year? No, definitely not. I am a loser. I'll tell you, really loser, because I when I started that time, I keep chasing a lot of trades. Right, I got very very emotional, and of course, I do a lot of stupid things. Then one of my biggest mistake also is that I have this problem I think most traders also have, that is called the shiny object syndrome. Means that when I felt that my method is not correct or is not uh, earning me what I want, I'll be jumping to another method and keep jumping and jumping and jumping. I even spend how should I say, a few thousands of dollars. What I mean is Sing dollars, Singaporean dollars, to learn from some so-called expert, which I won't say that is irrelevant or is not useful, but it's just that not that accurate or not the things that I really wanted. All right. So what happened was that I've been learning about MAs, the stochastic, the RSI, a lot of things, MACD, or what else I can think of. A lot of even Fibonacci. All right. The worst is the Elliott wave, which I really don't understand until now. But anyway, just keep it short. So how do I stumble upon supply and demand is that during last year 2020, uh, my country have a lockdown, a very very strict lockdown. So I have nothing to do, no resources, nothing. So what I will do that time was that I keep going through some YouTube channels on forex trading. Then I saw somebody introduce a supply and demand. So it's by a local teacher or mentor, which his name is by called by we call him Cikgu Mansor Safari. So I learned from him. Then he offers some course through his videos, and then I bought it, and then I relearn everything. I throw whatever I've learned from previous away, everything completely, and then I relearn it again and again. So from there, I do a lot of back testing, and then of course, uh, it does not go as smooth as you think it in the first place. But so slowly, then I learn my mistake, I correct my mistake. Then in the first month of my, or should I say, I double my account on the third week of my real trading. Right? So from there, I believe that this is the way of trading. Then, of course, I've been doing a lot of videos for you guys, but I might be jumping here and there. So here, I'll be completely doing the whole series from episode 1 to I don't know how many episodes, but everything, all right, everything. Make sure you follow me, follow this channel, and follow the videos. I'll be updating it. I promise I'll be updating it. All right. So let's start with it. So what I mean by here is that to make every entry like an elite sniper shot, really what I'm going to teach you is really something that is out of your mind. All right. Previously, when I first started trading, I've never believed that I will catch any trade from 0 to 100. All right. Let's assume that there's a range from 0 to 100. I'll never catch the trade from 0 to 100. I might catch on the 20th percent, means that when the momentum started, right? Because of I'm using some a method we call it the MA cross, because once it cross only I start to go into the trade. So here I learned, and then I felt that it is possible, right, by using supply and demand. Of course, there is other element that I have to put it into this supply and demand to make it better. All right. Okay. So let's go for the first slide. So there is some rules to follow. All right. I'm not going to mentor any one of you, but this is the rules that I want you guys to promise me to follow. Reason is that any of these, there is only 3 rules, 1, 2, and 3. If you fail these 3 rules, I can tell you, you might use the supply and demand wrongly. All right. Okay. So the first rule is very simple. All right. You must do your homework. You must back test. All right. You must back test. Do whatever you can. Either you're using TradingView or you're using other software. Just back test it. Don't trust a single words I say. Right. Back test it yourself. Then you'll know how powerful the knowledge that I'm going to share with you guys. So this is not a mandatory, but it's a compulsory process for you to learn. All right. So here I have a quote is that doctor don't make you healthy. Teachers don't make you learn. Trainers don't make you fit. Coaches don't make you rich. Your growth is your own responsibility. All right. So the second rule is that I do not, okay, repeat, I do not encourage you guys to use phone to look at chart for beginner. This is through my my own experience, right? Nowadays everything is about smartphone, right? You can get it anywhere. I mean, you can bring it anywhere you want. Of course, not using a computer or a tab. You can't bring the computer and tab with you everywhere. But I really advise you guys, don't use the phone to look at chart. One of the reason is that the screen is small unless you have a very big phone. Second is it's very difficult to look back at the history movement. So everything that I'm going to share with you, we are based on the history movement. Then we will forecast the future. How does the price going to move? All right. So the third rule, all right. Like what I said, I wanted you guys to be successful trader. So do not, all right, I repeat again, do not trade until you have watched and understand the videos that I share. Right? Don't watch. I'm saying here maybe I'm gonna make 5 to 8 videos. I'll say 8 videos, and you watch only 3 videos. You assume that you know everything, right? And you started trading using real money. It's up to you. It's not my money. All right, it's not my money. It's up to you. If you afford to do that, go ahead. If you afford to that, maybe I will consider making a paid course. No, it's okay. So remember to do your homework, do your own back testing, and remember one thing is that the purpose of the learning here is to win money, not lose money. So half known knowledge equal to zero knowledge, right? It's very, very dangerous. So do not go into real trade until you really truly understand everything, right? From there, you can choose. I'll give you choices. You can choose. I'll give you a lot of kind of setup. You can choose which one really suits you more. All right. So what I'm gonna do in these few videos is that I'm gonna illustrate what is you're gonna learn, you're expecting to learn. So here we have a very beautiful scenery, right? It's an introduction. We have a very, very beautiful scenery. And suddenly you see there is an enemy. Your enemy is running, right? Your enemy. Just imagine yourself being a soldier or being a we call it Rambo. If anyone know Rambo, okay. Then what happened is that your you are trying to sniper your enemy. All right. You need to have the rifle. All right. You need to have the rifle. Okay. Then I'm gonna introduce you how to put on your scope. That is where you get your sniper entry. All right. If you have the rifle without the scope, it's very difficult for you to aim at your enemy. So using that, I'm going to introduce you how and which kind of bullet you should be using, right? So that you can get the maximum damage, all right? And also the accuracy. Okay, so as I've mentioned, this is the introduction. So from zero to everything. So we'll be dealing with a candlestick only. All right, so candlestick. We are not going to deal with a line chart. We're not going to deal with a bar chart, but candlestick chart. Of course, I might introduce the line chart for some other purpose, but we'll be mainly using the candlestick. So here I'm going to tell you a few things. Every candlestick will give you four information. All right, four information. So it does not matter what the color is. It's up to you, your preference. All right. But we must know that a bullish candle and a bearish candle, right? Where is the open? Where is the close? Which is the highest point that you have went through before the end of this candle? And which is the lowest point you have went through before the end of this candle, right? Similar with the bearish candlestick. All right, next is that I'm going to introduce to you what is supply and demand, right? So I'm going to make it very simple. I'll give you a few example or similar example so that you guys understand what is the supply and demand. All right, so the introduction here is that there is two type of trader in the market. All right, it's either in the forex market or in the stock market. It's the same. It's the same. There are only two type of trader. All right. So the first type is the retail trader. So who are the retail trader? It's you, me, those people that are sitting in front of their computer or using their phone, all right, and trade through some platforms, software, or maybe MetaTrader 4 or MetaTrader 5, right? So we are the retail trader, right? We are trading for our own personal account, okay? So the second type of traders are what we call as an institutional trader. So these traders are the one that make trades for the big bank, or we call it uh, big bank or institutional, all right? So such as the bank, the insurance company, or the hedge fund. So example here is like the Citibank, HSBC, Bank of China, JP Morgan, and etc. So what is the difference between retail trader and institutional trader? So if you look at it, which trader, I'm going to ask you, which trader will have the most liquidity? Means that they have the control of the market. Of course, it's the institutional trader because their money is from pool. All right, means that it gathers from the money from the customer, and they have more money and more influence on the market. All right. So what happened is that you need to ask yourself here is that which type of trader have bigger capital and more order? Like I've asked you, is the institutional traders. All right. And then the second one is which type of trader move the markets. All right, is the institutional traders. So from there, I'm gonna ask you the last question. All right, you want to trade like an institutional trader or you want to trade like a normal retail trader? All right, which has been having a lot of we call it a margin call. All right, keep top upping your account. All right, stop loss, non-stop stop loss. Okay, so the institutional trader is like the shark in the sea. All right, if you look at this picture over here, they are the shark in the sea. And where is the retail trader? You are this small fish ready to be eaten by the big shark, right? This is not who we want to be. We want to get our profit, all right? We want to earn money from the market, not to be eaten by the shark, okay? So who we want to be? We want to be like this fish, all right? We want to be like this fish. I forget what's the name of this fish. It's attached to the shark. Okay, wherever the shark goes, it will go. And the most important thing is that whenever the shark cannot finish the food, right, this guy will finish it. So this is the one that we want to be. It's not they want to be a parasite. It's just that we want to follow how the big bank, the institutional trade. We need to know their footstep. We have to follow their footstep, right? So I'm going to open your eyes on how to look at the market, to notice, or should I say to identify the movement of from the institutional traders, right? So forex share or index trading, I believe in one theory, all right? The theory is what we call it as a zero-sum game, right? Zero-sum game. It's a very, very simple theory. It's all based on zero-sum game. So I'm going to give you an example of what is a zero-sum game. Before that, the definition is that the zero-sum is a situation in game theory in which one person's gain is equivalent to another's loss. So the net change in wealth or benefit is zero. Don't understand or it's a bit difficult to understand? Don't worry. Simple. Let's assume, all right, let's assume this is a table of poker. Okay, I'm not encouraging you guys to gamble. I'm not doing that. But let's assume that this is a table for poker or gambling, all right, whatever you play in your own country. So each player have the deposit of 1,000, or we call it the capital of 1,000. All right, so we have 4 players over here. 1, 2, 3, 4. All right, 1,000, 1,000, 1,000, 1,000. So now the total capital in this table, all right, within this table is 4,000. Simple maths. 1,000 times 4 people, 4,000. Right. So what happened is that maybe after 3 to 5 hours of gambling, okay, what we have is that this 4% did not change. All right, this 4% did not change. And the first player lost everything, 0. Second player lost everything, 0. Third player also lost everything, 0. Now the fourth player gained everything. All right, so he gained 4,000. Now the question is very simple. What is the total money in this table? It is still 4,000. All right. So how does this theory implies on our forex trading? Have you guys ever wondered how does you make money from the market, or where does the money that you make from the market came from? All right. there must be somebody doing loss trade, right? From there, that's why you get your money, right? So what I mean here is that zero-sum game is that for institutional traders, right? Institutional traders to gain money, he has to get liquidity or get money from somebody else. So who is that somebody else? You, retail trader, right? That's why you do not want to be the small fish, right? You want to swim with the shark. So this is what zero-sum game. Somebody's gain is another person's loss. Remember that, right? So how do we know what is a supply demand? How does the price move? It's very, very simple. So over here, we have an example of a range of price, all right? So let's assume there's a dollar over here and then going down and going up the price, right? So now, assuming that the big players, all right, the institutional traders have a $10 million buy trades. So how can they get all those trades? Where do they get the profit from all those trades, right? So the important thing is that the big players actually can see through your orders, right? From what platform or whatever, I'm not going to touch much on that theory, but they can see through all your pending orders, all your stop losses, right? One of it is called the Wanda something. I've forgotten about that. All right. So they know that there is some orders over here pending around this price. Right. So example here says 2 million, 3 million, 4 million, 5 million of sell. But they are going to do some buy trades. So what happens is that the trader, the big bank, all right, the big players will push the price into this zone first. All right, $1.01. Right? They push into this zone. Then after that, they will consume your 2 million. So means that they have remaining of 8 million left. Then what they're going to do is that they're going to push the price again higher, consuming another 3 million of sell order in the market. Right? And now they are left with 5 million. Right? Then they'll push the price again higher, right, into the 4 million range, and they have 1 million of orders left. Then last, they push the price into 5 million, where they'll take their profit. And imagine that all these traders over here have stop loss, stop loss, stop loss. Okay, once they stop loss means that they lost money and the big players gain their money. So the next question is that the big players, there's only 1 million left, but they push into the 5 million sell. So what happened? Of course, big players are also traders. So what does it mean? Traders, they have only 3 things to do. First, place a trade. Second, stop loss. Third, take profit. So when they reach this area, they will take profit because that is what they want, 10 million. And what happened next? Right, there is a 4 million of sell trade and suddenly you can see the price drops. Is this familiar to you guys? Alright, is this familiar to you guys? A price suddenly goes up very, very fast and then there's a sudden drop. So this is why and how the supply demand price move. Okay? Alright, next I'll talk about the supply and demand movement using the concept of balance and imbalance. All right, so there is actually another name for this balance and imbalance. Some people call it as accumulation and distribution. So remember here, guys, don't always be too stubborn about the names, right? It does not matter what is called. The important thing here is that you must understand the concept because it's actually the same. Right, so I'm going to tell you a story easy for you guys to understand related to everyone. That is the COVID-19 pandemic. All right, so I'm going to start with a story so that it will explain a lot about this balance and imbalance. All right, so the story start is at the 2019 during December. So during that time, there is no news about COVID-19. Then what happened is that on the market, the price of the face mask, all right, a lot of people know as the face mask, selling in my country is around $3 to $4. So the range is always there, $3, $4, $3, $4, because nobody know what is going to happen in the future, right? Right. So that was in 2019 December. So this is the stage where we call it as a balance, because the supply and the demand is almost equivalent, where there is no sudden surge of supply or sudden surge of demand. So it's in a balanced state. So the price is moving in a range. So what happened was that news broke about the COVID-19, about the pandemic, the dangers of it, on during the February of 2020. Then everyone is rushing to the pharmacies, to whatever they can grab online to grab this mask. And at that time, the price of the mask suddenly surged, suddenly become higher. Reason is because the demand is higher than supply. Because the supply, or should I say, the manufacturer does not does not ready. They are not ready for sudden surge of demand. So over here, the demand is high, the supply is low. Then this is a stage what we call as an imbalance, right? Because of the demand is high, supply is low. Then the price will reach a certain state. All right. So this is during the lockdown. All right. During the lockdowns, where a lot of people cannot come out from their house and buy groceries. Some even stricter than that, cannot buy groceries. For our country, my country, is that we can go out to buy groceries only one person per family. So a lot of people stop buying the mask, or they just buy necessarily, because the price from $3 to $4 suddenly surged into $24 to $25, around that price. So at this stage, when the price reached this area, it's called balance. All right, balance, because the supply at the market and the demand is almost the same already. All right, almost the same. They will stay at this price. Then suddenly what happened? A lot of manufacturer, either from China or locally from your country, I believe so, they keep on manufacturing a lot of face masks. So what does it mean by here? All right, it means that the supply in the market is a lot, but now a lot of country is easing the lockdown. Then the demand is becoming less and less, right? So what happened is that the price came down. Reason is that the supply is high and the demand is low. All right. Then this is another stage that we call it as a imbalance, because of the supply high, demand low. And of course, it will reach a certain price, right? Because the pandemic is still going on. But this time around is different. It's totally different from the early stage, because a lot of manufacturer is manufacturing, but some of the country are still, how should I say, compulsory for you guys to wear a mask, right? Then what happened? Manufacturer keep on producing, and even some people keep on investing in opening a lot of factory that manufacture face masks. Then what happened? The supply in the market become even more. All right, even more. Then the price keep dropping. All right, at a certain stage that is so cheap that it goes back to the early stage of the early stage before the pandemic. The price almost there, or sometimes even lower. Reason is that the supply is already a lot more than what the demand can get. All right, so this is a stage of balance and imbalance, and some people call it at this as a accumulation. All right, accumulation. All this is distribution. You see, it's the same name. All right, so this will be the last slide of this video. So I'm going to show you from the chart what is a balance and imbalance. And in the next video, all right, the part 2, actually there will be a lot of parts. So the part 2, I'll talk about the market structure. All right, the market structure before we go into the concept about trading using supply and demand, incorporate with support and resistance. Of course, we have a different name for our support and resistance. That is a SSR, significant support and resistance. Then I'm gonna teach you I won't say teach, sorry for that. I will share with you a lot of setup. Okay, all right. So there will be a different kind of setup, and this kind of setup is either you can mix it around, or you want to use it individually. All right, it does not matter. It works, right? But you have to choose. Then after that, I'm gonna share with you some confirmation, how you can make your trade become even better in a future videos. So there will be not only 2 parts or 3 parts. There will be maybe 6 or 7 parts of the videos. And of course, everything that I will share with you is absolutely free, that you can watch in this YouTube. And all I asking is that maybe you're gonna give me a like, right? If you like the video, and do subscribe, because I don't want you guys to miss out any of the important things that I will share with you guys. All right, so I'll jump into the chart, show you guys what is a balance and imbalance. All right, so here I'm going to show you the example about balance and imbalance, and we are looking at XAU USD, which we know as a gold versus the USD. So just look at from this area, 8th of March 21 to somewhere around here, 9th of August 21. So where is the balance and imbalance? So if you look at the price, we can see that there is actually a big balance and imbalance and a small balance and imbalance. So for our convenience for explanation, so this will be the balance state. All right, if you look at it, this will be the balance state, because the price is moving in range at this point. All right, at this point it's moving in range. Then suddenly there is a surge of imbalance into a higher area that broke the previous structure, right? And then it will reach a balance state again. All right, then what happens is that the price break up again and have another balance state. Right, then the price break up again, then they have another balance state. Can you see it? You can see that the price, if you notice that the price is moving in range at this point. Then what happened was that the price came down, crashing down a bit, all right, into an imbalance state. So before I go further, you can see that all this is actually a big supply area, a very, very big supply area. I'm not going to go into the more detail yet. So I want you guys to understand the big concept about the supply and demand first. So this is all because of there is a lot of demand that push the price higher, push the price higher, push the price higher. At a certain stage, maybe it meet a bigger supply that push the price down. All right, so over here that there is a supply bigger than the demand that push the price down over here. And this will be our last state, the big one, right? The big one. You can see the price is moving in range. So this is a last stage of a balance. All right, before the price, I don't know what happened next. Okay, the price is moving up and down. All right, so this is a simple explanation of what is a balance state, pushing the price go up and then become a balance state again, and then pushing the price, balance, pushing the price, balance, similarly, pushing the price downwards and then become balanced. So this is a very simple explanation about the balance and imbalance using supply and demand. All right, so I'm going to end the first part of the video here. Like what I said earlier, this is all about the concept. The first video is all about concept. You must understand the concept first before we go further into things, because I already promised gonna bring you guys from the surface into in-depth. If I don't explain it this way, it might be boring. If I don't explain it this way, a lot of you do not understand the real concept of the balance and imbalance, the supply and demand, the support and resistance. All right, so see you guys in the next video. Bye.